we are joined by Ashish Tomar, who is the Managing Director at EMS Limited, who joins us now. Welcome to the show, Mr. Tomar. My first question to you is, with board's approval of raising 400 crore as QIP, what is your plan with respect to deploying these funds? I believe that this will be majorly used for working capital, but are there any other areas that you will be using these funds for?
Yeah, good morning and thank you for having me. Yes, you're absolutely correct. We plan to use this as working capital, and the majority of the funds raised will be used for the working capital only.
Hi Ashish, Anushi joining in here. So you've mentioned that your working capital cycle, you'll expect an improvement. Can you quantify what is the sort of improvement that you're looking for? And also, are we looking for any future such of fundraising opportunities, as there are some large scale HAM projects also that you're looking at? So what's the update on this one?
Yeah, the need for this fundraising was because of the unexpected growth that we experienced in the last financial year. From almost 450 crores to we were able to achieve a turnover of around 720 crores. And for the this year also, we expect a growth of around 30%. So because of the nature of the business is such that are almost 10 to 15% of our working capital is stuck as retention with the employer, which is government bodies in our cases. So to fund the growth and to encash the opportunities that are present in the market, we will have to raise this capital.
Mr. Tomar, just with regard to your commentary on government, or rather some bit of your receivables locked up with the government, do you expect a release of that anytime soon? Is that at all a concern for you, that this may get delayed at all?
No, this retention money is released after the completion of the project, which is typically around 3 years is a average project completion time in the water sector. And this working capital crunch that comes up in this business is due to the, you can say, the fast-paced growth that we have been experiencing. Because if we maintain our revenues at a constant, then this is not a concern. But as we are growing at a rapid pace, so the working capital is stuck with the employer.
And any reason why you would opt for equity over debt? Because you're largely debt-free as well.
Yes. We are currently debt-free. The only debt we have is around 50 crores that was raised to fund a HAM project that was executed by us.
So if it's temporary, Mr. Tomar, why not opt for debt?
So we are more comfortable with the equity.
Sure, understand. Okay, and Mr. Tomar, so when and how much in terms of quantum will get released as the government starts releasing some of those receivables to you? How quickly do you expect that to start coming, and what's the kind of quantum?
So it is a continuous cycle. So if we, for example, this year retention money of our would be released would be for a project that was completed. The retention that was held up over a period of last 3 years. So that retention will be released this year, and next year would be the previous 3 years. So there is a gap of the growth around due to which this retention amount keeps on increasing.
All right, Mr. Tomar, this ADI Ganga project of 681 crore is one of your biggest tenders till date. So I want to understand, what are the kind of execution timelines for this particular project? Will it happen in phases? Will it happen in one go? Give us some details on that.
Yeah, the completion timeline is 3 years. It's a typical completion timeline for this kind of project. And it will be taken up in one go, not in phases.
Mr. Tomar, you mentioned in our last conversation that there would be no compromise on margins. Now that you're shifting focus to the road EPC side of business, we've seen a lack of conversion of these orders because of the type of margin profile that you command, which is in the range of 24 to 26%. Want to understand what are the current developments that are happening in the road EPC projects? Are we seeing some conversions? Let's even talk about the Ayodhya one especially. What's the update on here? What's the kind of margin guidance that we should be looking for FY25 and going ahead for next 2-3 years as well?
So currently we do not have any road projects. We did bid for around a couple of projects in the HAM sector for the road works, but considering the growth margins that the margins that we were expecting, we were not able to secure the projects at those margins.
Mr.
So
Tomar,
right now, the most of our order book is in water sector only.
Mr. Tomar, given the fact that you're expecting a higher margin, would you, and therefore possibly not one of the reasons why you're not winning these projects, would you look to dilute margins at any point?
No, sir, we are not looking to dilute margins at any point.
I remember you had given us the same commentary just a couple of months back, but I'm just trying to egg you on to try and understand if that position has changed.
No, sir, no. It remains the same.
Understood. So you will continue to be patient with regard to the projects you bid for, and you will continue to have the margins that you are looking for, if at all you get these projects. And if not, what?
No, sir, I think there is enough work in the market.
Okay.
The country is growing at a rapid pace. That will need a contribution of all the EPC players that can pitch in. So I think there is enough scope for everybody to get work on their own rates.
Okay, Mr. Tomar, even one of the important points that you mentioned was that the diversification that we are seeing in this road EPC business was because of limited room of growth in the water EPC business. I want to understand what is the pipeline of opportunity in water EPC versus the road EPC business. What is the current pipeline looking for the HAM projects that you've mentioned, and going forward, and what is the success ratio that you're seeing in the water EPC side of the business?
So considering the market size, I can give you a rough estimate that almost, I think 8 to 9 lakh crores of worth of projects need to be executed in water sector in the urban areas of country only. If we keep the rural areas aside for a moment, then this is the quantum of work that needs to be carried out in urban sector. So I think there's a huge potential for water sector going forward. And considering the targets given out by the government, I think this work will be carried out in a timeline of next 8 to 10 years.
All right, and Mr. Tomar, your bidding pipeline currently exceeds 4,000 crores. So I want to understand that there might be more biddings that you've undertaken, and that might be in both road EPC as well as the water segment. So I want to understand that if the success ratio is 10 to 15%, what kind of key projects you're expecting in this particular quarter and for FY25 overall?
So currently our bidding pipeline is at 3,000 crores. Around 1,000 crores worth of projects has been opened. Out of which we have been able to convert this KMC project into an order, and out of the remaining 3,000 odd crores, we are hopeful and keeping our fingers crossed.
And Mr. Tomar, the final question is on the competition side. Now that you're entering into the road EPC, what is the kind of margin profile that you expect here with the kind of competition that is already present? Don't you expect a dilution on this front as you move forward?
No, because in government sector, there's a bidding capacity for each and every player. So one player cannot take up all the work in the market. So I think we'll be patient and wait for our turn.
All right. Well, Mr. Tomar, thank you so much for giving us those insights on EMS Limited, and thank you so much for taking our time and speaking with us at NDTV Profit.
Thank you.